It's already done
Morning,
it.
guys. It's the 21st of May. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Good morning,
Good
all.
morning.
Good. How are we? All okay?
Yeah.
Very well, thanks.
Yeah.
Yeah.
Well
Oh,
rested.
the sun is
Enjoy the
shining
sunshine.
now.
I'm looking forward to my day off tomorrow.
Are you not going to be on Talking Ball then?
Hangover Friday.
No, it's on Friday off. So you're going to miss me?
Slacker. Yeah, definitely. Well, people's balances might be happy that
Benefit
you're
from
not.
it. They might benefit from it.
There is that possibility. Okay, interesting day yesterday. Bit of volatility. Also, some evidence of quiet periods throughout the day where I guess most of the UK were outside rather than sitting in the trading screens. Not much on the old news front, but I'm going to chuck it over to you, Ian, to give us a roundup on all
Hold on.
things FX, if you don't mind.
Yeah. So it was risk on yesterday, or for the majority of the day, which resulted in another move to the downside in the dollar index. This is the dollar index still consolidating at how many days for now? Seems like forever. 37 trading days. We're just starting to get an uptick this morning. Joe's favourite fib, 78.6%. So we've just hit that, and we're just moving again to the upside.
So still the gap. Well, not quite, is it? The gap's down
from there.
From the
Where
high.
is the gap?
It's not really. It's at the close, isn't it?
Yeah, down here. Yeah. So I still think the scope for a move in either direction, but I mean, we could still see a move up towards this sort of 101.19 area. News-wise, obviously it was the Fed Reserve minutes that released yesterday. Like everybody else, all the central banks just said that they'll do whatever needs to be done, but they're not supportive of negative interest rates, and that's probably why we're seeing a little bit of an uptick in the dollar today. There wasn't really a great deal of news for other currency pairs. It was a bit of a, like I said, it was a bit of a risk-on day. So we did see the likes of Aussie dollar, New Zealand dollar gaining most out of the dollar pairs. So let's have a quick look at the charts. Euro dollar, it did manage to break the alphabet channel to the upside, but we are seeing a bit of downward pressure this morning. Rallies have just been sold into. Cable, I think it's quite interesting. We've got an AB equals CD formation, which completed here. We then rallied up. We had some B-spot resistance at 120 to 122.80. What I do like here is if we get a decent bounce, and I know a lot of people hate them, but if we get a decent bounce off this 50% level, we shouldn't make a new high and probably come down to form a Gartley formation. So looking at much deeper dips in cable. Dollar Swiss, and again we've sort of held the same idea for this bad boy all week, and we haven't been triggered yet. Obviously, if euro dollar moves to the downside, then dollar Swiss is inversely correlated. It should move to the upside. We've got 78.6% fib here, and we've got trendline support of a triangle formation located at 96.36. Just want to go to this one, euro yen, and again sort of just looking at correlated pairs. Euro yen's hit this 161.8% fib level, so that's negative for euro. And if we go to euro sterling, we're just around about a 38.2% retracement level, which is off the big move, which is this move to the downside. So it's quite an important fib. That was obviously an 800-point sell-off from peak to trough on the daily chart. And just going last one, let's have a look at Aussie dollar. Ooh! And again, this was our trigger level yesterday, 66.10. So we did get a bit of downward pressure, but we're just seeing a tick up this morning. I think again it's a harmonic pattern. It's a butterfly, not a Gartley, but limited upside, which means limited downside for the dollar index. That's what I'm looking at.
Thank you, pal.
Lovely.
Steve, or do you want me to have a look at
Yeah, do you want to go a little go? Well, you can see
Sure.
me fiddling.
Fiddling.
How rude.
Okay, so indices yesterday, decent rally from the lows, which started around about 11 o'clock on the 19th, and we saw a decent push higher. This is the FTSE. We were looking to sell higher around about this 78.6, expecting that to act as resistance again around about 60.90. Didn't quite get there. Fell a little bit short, and we have rolled over to the downside over the last few hours. It was actually a 78.6% of that swing move there that it failed at, and has started to head lower. On the German market, we did see a retest of the high that we posted on the 19th, but we posted a kind of a shooting star candle there around about this 88.6% fib level, which again has acted as resistance, and we sold that level again yesterday, but didn't get too much downside before the 9 o'clock close. So looking for another opportunity to try and sell that again today, expecting this level to continue to resist upside advances. Over to the US, the S&P, very much like the DAX, had a go at trying to overcome this high that we saw on the 19th and has been rejected. Not exactly a massive sell-off, but a decent few ticks has been shed after a retest of that level at 29.81. And on the Nasdaq, sorry, that's the Dow Jones. Nasdaq made new highs above the 19th of May. That remains the pick of the bunch in the US indices, obviously very heavily weighted towards technology shares, and that bull market is still intact at the moment with a lot of shares that are within that index. So overall, still looking to sell into a little bit of strength. Think the upside will be limited, but expecting there to be plenty of volatility in these, and trading not to be exactly straightforward at the moment. Pretty much rounds up the indices.
Lovely.
Yeah.
Cheers, Joe.
Cheers, mate. Thank you.
There you go, Steve.
Yeah, looking at commodities, and oil prices edged higher again yesterday. The US crude inventories fell again, so that's easing concern over a supply glut, but there's still obviously lingering fears over the economic recovery from the pandemic. So that's capping gains slightly, but you can see we sort of like a little bit of indecision right at the top. So a little bit of momentum stalling on oil, and it seems to be across the board we're getting that. We've obviously copper hit more than a 2-month high, again on hopes of a global recovery, and the US equities pushing higher yesterday, but that's tailing off this morning. A little bit of over exuberance. Gold seen a little bit the same again. It's we're still pressured by the hopes of a recovery, but there's still the prospect of more stimulus being required. So underpinned again, dollar index and gold sort of like not really anything to shout about at the moment, but we're seeing a little break of this short-term trend line in gold. So I do expect a further push lower today in this. I'm still looking to buy a dip. This 1720 to 25 area I think could act as pretty decent support on an intraday basis. But we are, if you look back at where we've come from, we've had a sort of like a decent move up, still sort of overshadowed a little bit by this shooting star candle formed a few days ago. Silver still performing a little bit better, but as we talked about yesterday, the gold silver ratio is still at lifetime highs, close to it anyway. You can see $17.20 and $1,736, over 100 times in price, in value perspective. So still not really got anything really to say in. It seems to be sort of like with just the momentum stalling, potential for a little bit of a pullback. You see on the daily chart in silver, stalling around this 78.6 fib. The only other one really I wanted to show was obviously it may be in the early stages of this inverse head and shoulders. I think we get a break of this 36.50 level that could play out quite nicely, and copper's in this bullish channel still. So any setbacks expected to be bought into.
Lovely.
Great, thank you. Okay, so let's go to the gun to the head stuff yesterday. Not a hell of a lot for us to talk about due to the fact that we all got stopped out. So 3 stop outs yesterday on New Zealand dollar, US dollar, Nikkei and Euro sterling. We often have days like this. They're fairly few and far between, thankfully. A little bit of a dip down in the P&L overall, but clearly the trajectory is still looking pretty decent, and losers are part of the game, unfortunately. So let's move on. Get back on the bike. Who's got a trade set up for us today? I think Ian's lining up Euro Yen, I reckon. Yeah, there it is.
Yes, Euro Yen. So just talking about those Euro crosses again, they've all hit decent barriers. And looking at this, I don't believe at the moment it's going to be a 4th wave correction. So edit waves say 1, 2, 3, 4, and then up in 5. But even if it is, we should get a bit of downside. This looks like a wedge if we go a bit closer in. Da, 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 da. Da, 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 da. And if we put on a oscillator, take your pick, RSI, then we should see a move to the downside from highs. So it's got higher highs on the chart, lower highs on the oscillator, often indicates the top of a trend and the start of a new downward bias. If we go to, let's pull it out a little bit, I think we might move all the way down here and actually get a bit of a funny old head and shoulders pattern. So left shoulder, head, and then a right shoulder over here somewhere. So anyway, enough waffling, getting short of Euro Yen.
It's a lovely candle there.
118.19. Don't have to change anything else, do I? That was our call for today. I'll just move that in to make it a little bit more sexy,
Yeah,
shall I?
Definitely, yeah.
So getting short at 118.19, stop at 118.40, targeting 115.88.
Okay. Steve, do you want me to go?
I'm ready if you want.
I'll go because it's following on from what Ian's talking about. It's Euro again. I'm looking at Euro CAD. This is a 60-minute chart. We've seen this big move down here and some sort of recovery, which remains within the channel at the moment, so fairly choppy trading, but it seems to have stalled around about the 50% level. If we take a closer look at this, we've got this range that's formed. We've got resistance level there at 52.92, which I've highlighted, and looks as though we've tried to break above this range this morning on this hourly bar that we're just about to finish in the next minute, and posted a bit of a reversal candle. So I'm going to jump on that now, expecting this to cap the gains in the short term. Just to be safe, I'm probably going to go just above that high there on 6th of May. So 153.08, and I'm going to target a move down to the lower end of this range at 51.55. Current price is 52.72.
Lovely. Good luck.
There you go, Steve.
As I said, in gold, I'm expecting a little bit more of a overshoot to the downside and looking to buy and get long around $1,725. So I'm going to go for the selling this at the market here to move towards that 1725 level where I'd like to buy it. I'm going to keep a tight stop in it. I've just taken a previous resistance around here. It's broken this pretty bearish candle on the hourly chart, broke below the lows, forming a little bit of a flaggish type formation if you squint really hard. And so I'm going to put the stop quite tight. It's only a 2-to-1 risk reward, but I think it feels all right. Getting short at 1736, stop at 1741, 5-tick stop, and a 10-tick target, 1726.
Lovely.
Okay.
See, easy.
Good luck. Okay, so day ahead. What we got news-wise? Quite a lot out on the old calendar today, by the looks of things. Just to sort of wrap up on the news from yesterday, as Ian touched upon, the Fed highlighted the willingness to retain rates near zero. There was no support for negative interest rates within the committee. Overall risk appetite generally was quite strong yesterday, and Asian markets did see that pull back a little bit overnight. We've explained that on the indices today. We've got PMIs out all over the place today.
Have come in a lot better than expected this morning
already. So what we just had, the French and the German ones out.
French 40.3 was expected 36.1. German 36. They're worse. 36.8 expected 39.2. But then the preliminary PMI from the Eurozone's come out at 39.5, expected 38. With a composite at 30.5, was expected at 24. Okay. So it's a bit more green than red.
So we've got UK next at 9:30. We're expecting to fall to 26.6 from 32.6. So keep an eye on your sterling crosses as we go into that. And then after that, we've got US PMIs at 245. We're expecting a rise to 42.4 from 36.1 in the previous month. And we've also got US existing home sales, and they're expected to fall 30% month on month, which is obviously a lumpy number. So we'll keep an eye on that. And sandwiched in between all of that, we've got US jobless claims at 1:30. Previous week saw a reading of 2.98 million claims. So looking to see that not as bad.
Jump higher.
Yeah, if you bear
They're expecting 2.4.
Okay. So not quite as bad then as the previous week. So maybe they've peaked on that.
Yeah, it should actually come down eventually to sort of zero because everyone will be unemployed. Apart from the person counting the people that are unemployed.
Yeah.
That's a good job to have.
They'll be furloughed though.
Yeah, well, they can't do the job then, so they have to. No. You can't furlough them.
Okay, so that pretty much wraps it up. I don't think there's anything else unless you guys have got anything to.
No, I'm just going to get this factor 50 on again, and maybe
need the sun to break through the clouds.
Catch a Tuesday. Monday we're off.
Oh yeah, long weekend.
I won't be here yesterday. If anyone wants to sort of like get my advice in between, call me on 0121 do one.
Okay.
From the bottom of the gym bottle.
All right, mate. Well, enjoy your couple of days off. We'll see you on Tuesday, and for everybody else, Ian and myself will be back tomorrow morning.
Yeah.
Right,
Cheers.
have a good one, guys.
Cheers.
See you later. Bye.
Bye.